Hey guys, and welcome to the Working Money Channel. Check this out. South Korea's pension fund has now bagged 280,000 Coinbase shares. So, Korea's pension fund, banking on cryptocurrency and the crypto economy, South Korea's National Pension Service, one of the world's largest pension funds, invested $20 million in Coinbase in Q3 of 2023. I got to keep bringing this up because Coinbase, one of those stocks that really did not benefit from the crypto space when it was released. We were seeing the euphoria phase in the bull market, and they bought in Q3 of 2023. So somewhere in and around July, August, September. So somewhere in and around here, great opportunity to buy coming off this inverted head and shoulders pattern, confirmation that we made a new high. They waited for the retrace, kind of a textbook trade, actually. Then they decided to put in $20 million. They bought just over 280,000 shares of the global cryptocurrency exchange Coinbase in the third quarter of 2023, an investment that has gained 39% in value since the purchase. The NPS acquired 282,673 Coinbase shares in Q3 of 2023. According to a stock holdings file reported with the SEC, the investment is worth $27.7 million based on Coinbase's last recorded close of $98.15. So they've already made $7.7 million on the trade. According to the SEC filing, the NPS has acquired its Coinbase stock batch for about $19.9 million, which implies that the pension fund profited over $7 million, or 39% already. And they've only been holding it for, 3-4 months, something like that. I think that was a great move. I think that was a great trade. And I also think most importantly, what it shows the world about investing in cryptocurrency and crypto-related products like exchanges, anything that's on the stock market. We're going to see more IPOs probably follow suit. The Ripple IPO, I have a feeling we're going to see a slew of new IPOs come online probably by 2024, late 24, early 25. I think, at that point when the euphoria kicks in and everybody's really happy to be in cryptocurrency, similar to what we saw back here in April of 2021 when Coinbase decided to launch their IPO, that's when we're going to see more of these come online. So hopefully a Ripple IPO, I don't know yet, but this does really bring the picture into focus and gives us more confidence that the crypto market, not that we needed it, but that the crypto market is going to thrive. So great news there. Wanted to keep moving because Cypress Domenencore here posted this, okay? More insight on why the crypto market is going to explode because of relationships like this, okay? Ripple and Circle integrated with the BIS because banks never had what it took to build the new payments rails. We got to remember this, okay? Bankers, they are happy with what works. They're not technological innovators. They're not software developers, as per this clip. Listen to this, guys. Basically, banks suck at technology, and this is why they need companies like Ripple.
And this is why I make the distinction between clearing and settlement rails, is that banks suck at technology. I know this. I've done technology for banks in my career. It's not that there aren't great people, but the challenges of legacy technology stacks, huge, often amalgamated businesses, and the fact that they're full of bankers and not software engineers means that when it comes to moving the clearing rails ahead, using new technology to do things that the next generation of Indian consumers, thanks to UPI, like getting your paycheck right after you do the work, are going to take for granted and simply aren't going to happen in the United States as long as we continue with the peculiar decision to let banks be the things that provide the clearing technology and develop the clearing technology for the payment system. Their record is spotty at best. You're more likely to be a French humorist than a bank when it comes to developing transformative payment technologies, 1 to 0, basically. If you're wondering, it's the EMV chip technology. It's just not something that they do well.
Certainly not something they do well, and they have no incentive to do it well because the friction, guys, as we know, the friction is where they make their money. This is why, when we have superior systems like RippleNet, it's a threat to banks, but at the higher level, we do need something more efficient to transfer value. And so, the powers that be, the ones even above the big bankers, let's say in the United States, they see this opportunity to completely transform the legacy system. As we've been talking about a controlled demolition, a great reset, we are seeing this in real time, and it's happening in slow motion, but all this is occurring in front of our eyes, and the two sides each team, I guess you could say, are doing their damnedest to make sure they survive. And so, I guess legacy banking companies like JP Morgan, they've decided, okay, well, I guess let's hire our own software developers, and this is why we're getting inferior products from the banks. And this is ultimately why Ripple is going to thrive. So I wanted to thank Cypress Domenicor there for posting that. Now, Mark Phillips also brought this to our attention when it comes to central banks, CBDCs, and a new financial system. Outstanding explainer by Ripple. This reminds me of a recent IMF document which read a public version of DLT as used by Bitcoin and other cryptocurrencies is not suitable for a CBDC because of concerns about control, privacy, scalability, and finality. However, central banks are exploring some of the new technology features that DLT offers in a context of a permissioned private version that is controlled entirely by the operator. And guys, as you know, Ripple has been very, very successful at getting new banks on board, approaching central banks, signing them up for new pilots for CBDCs. Listen to this.
I often get asked the question, what's the most exciting thing about CBDCs and stablecoins? In one word, innovation. My name is James Wallace, and I head up CBDC at Ripple. You might already know that over 90% of central banks around the world are now exploring CBDCs. There are many drivers for CBDC, including the decline of cash, improving payments efficiency, lowering costs, and the desire to innovate the ways in which money is used. Ripple's CBDC platform is your one-stop shop for the creation of digital currency, designed for minting, managing, transacting, and redeeming CBDCs and stablecoins. Here's how it works. First, standard APIs enable seamless integration of the CBDC platform into a central bank's existing systems. This allows the bank to leverage their current infrastructure. Central banks can then mint their CBDC on a private version of the XRP ledger that they control. Digital currencies can then be distributed directly to authorized accounts, either through commercial banks or directly to consumer wallets. Transactions run on a private ledger and are settled in seconds. And this is all done in a regulated and secure environment. The Ripple CBDC platform also permits the secure destruction of currency, giving the bank full control over monetary supply. The results? Lower costs, faster transactions, greater financial inclusion for all, and all done with a minimal carbon footprint. So explore this with us today. We'll work together to build a custom pilot and future-proof your financial infrastructure.
So there you go, James Wallace, pitching the CBDC to central banks. I don't think we really need a pitch anymore. I think these central banks are now all realizing, okay, this is the way we have to go. Yesterday, I was talking about a statistic that 70% of central banks were already looking at a pilot, and I don't know how old that statistic was. I think that was from the ISO GOAT, if I remember correctly. I talked about it yesterday. But James Wallace said now it's 90%. So many of the central banks are now on board. Cryptic Poet down here saying it too. All banks will come around eventually. Either they'll do it or they will fade away. So very interesting point there. Of course, the banking system can't rely on their own technological expertise. They're going to have to, either hire a third party or integrate with something that already works. And, we're finding now that a lot of these banks are integrating with RippleNet because they have a track record. They've been doing this now for a while. So I wanted to thank Mark Phillips here for posting that. Ripple partners like FOMOPay have also been successful in obtaining money license services. Okay, guys, this is another one coming out of Hong Kong, specifically courtesy of Ingrid here on Twitter. Singapore's FOMOPay partners with Ripple for XRP-based treasury payments. So guys, here's the lowdown. FOMOPay will partner with Ripple, the San Francisco-based blockchain company, to utilize its XRP-based tool that enables instant low-cost settlements without the need to hold pre-funded capital in a destination market, the Singapore-based company said. Some of the fast facts here. FOMOPay will leverage Ripple's ODL to achieve instant low-cost transfers, from Euro to USD. This is coming from a press release. Ripple's on-demand liquidity uses XRP, as we know, as that cross between the bridge currency for fiat transfers, and not just fiat transfers, anything of value, really. Ripple's ODL services are being used by companies already in the world, including SBI, Remit, Tranglo, and Pipple, or PayPal. Pipple? No, not PayPal. That's Pipple. People, I still don't know how to pronounce that. Anyway, ODL helps payment service providers like FOMO Pay to improve internal treasury flows, hence reducing business costs and streamlining operations, the press release said. And then finally, prior to incorporating ODL, FOMO Pay's treasury solution would require 1 to 2 days for Euro to USD funds to transfer. So 1 to 2 days just, in 2023 is just not acceptable when we do have the technology to do better. So wanted to thank Ingrid for posting that. Speaking of the technology, guys, it looks like we recently got a statement from Kristalina Georgieva, Mr. Man here on Twitter posting this. The IMF says central bank digital currencies can replace cash. Can you see the finish line? They're saying it's going to replace cash. Now, all of the politicians that we've heard out of the United States are very adamant and very steadfast on the fact that central bank digital currencies will never replace cash. When they're talking to the people don't want to hear this, but maybe she said the quiet part loudly. From CNBC, IMF says central bank digital currencies can replace cash. This is not the time to turn back. Okay, guys? Central bank digital currencies have the potential to replace cash, but adoption could take time. This coming from Kristalina Georgieva, managing director of the IMF. And here's a quote: CBDCs can replace cash, which is costly to distribute to island economies, she said Wednesday at the Singapore Fintech Festival. They can offer resilience in more advanced economies, and they can improve financial inclusion where few hold bank accounts. CBDCs are a digital form of a country's fiat. They're powered by the blockchain, as we know. CBDCs would offer a safe and low-cost alternative to cash. They would also offer a bridge to go between the private monies and a yardstick to measure their value. So guys, notice that they will offer a bridge and a go-between, just like cash today, which we saw withdrawals from our bank. The IMF said that more than 100 countries are exploring CBDCs, or approximately 60% of countries around the world. The level of global interest in CBDCs is unprecedented. Well, when you're kind of faced with the fact that, you better adopt or you're going to be left behind, of course, we're going to see 90% of central banks decide, okay, let's do this. Several central banks have already launched pilots. According to a 2022 survey conducted by the Bank for International Settlements, of the 86 central banks surveyed, 93% said they were exploring CBDCs, while 58% said they were likely to or may possibly issue a retail CBDC in either the short or medium term. So that is kind of where we stand today, guys. Over 90%, an overwhelming amount now. And so it sounds as though whether you're going to have a privacy component to your central bank digital currency or not, it looks as though, well, at least according to this lizard, we are going to see CBDCs replace cash. Unfortunately, and eventually, not right away. But there you go. From Mr. Man here, wanted to thank him for posting that. And I also have a clip here, guys, another one courtesy of Ingrid here. This is Kristalina Georgieva from that event. IMF Managing Director Kristalina Georgieva announces her strong support of CBDCs and crypto development. Listen to this.
A large and growing number of countries are steaming ahead with development and deployment of central bank digital currencies. And while crypto assets, including stablecoins, have had their ups and downs, they're not going away. The international payments system needs to be improved. We need to make it cheaper, quicker, and easier, so that workers can send home remittances and small businesses can increase their exports. But we must also urgently guard against money laundering and other crimes, including fraud and theft from retail investors. And thinking ahead, we need to ensure that substitution out of weaker currencies doesn't leave monetary authorities unable to fight inflation, promote growth, and maintain financial stability. A stable and resilient international monetary system is core to the IMF's mandate, as is helping our members grow. So we are working to help them seize opportunities and manage risks in several ways. We are offering capacity development to countries considering CBDCs and working with partners towards a comprehensive policy framework on crypto assets.
So a little bit more from that interview, not talking specifically about the fact that crypto assets are going away, although she was quoted as saying that up here. CBDCs can replace cash, which is costly to distribute in island economies, for example. So it was a longer interview. I really wish I had heard her say that. Guys, this is no secret. This is no surprise, really. Despite what the politicians say, they are obviously using talking points that you want to hear. This is going to happen, and this is happening now. And, if you were to be talking about this 4 years ago, people would think you were crazy. But we all saw it way in advance during the beer flu, right at the beginning of the beer flu. Look, this is the beginning of the Great Reset. And guys, this is just another step in that direction. So wanted to thank Ingrid again just for posting that. Not to mention the fact that Tranglo, a confirmed Ripple partner, utilizing XRP right now, also commented on the Christina Georgieva presentation, and they even interviewed her at this FinTech Week. Exploration of central bank digital currencies and financial technology must be expedited to improve cross-border payments. She says that although there was progress compared to 5 years ago, the industry players need to pick up speed. Some 60% of countries are studying CBDCs. Georgieva said that there are many benefits to CBDCs, including replacing cash. So even Tranglo is mentioning this. The success of CBDCs will hinge on policy decisions, how the private sector responds, and how technology evolves. AI, for instance, could amplify some of the benefits of CBDCs. It could improve financial inclusion by providing rapid, accurate credit scoring. Another is tokenization of financial assets, such as bonds issued on blockchains. This opens another door to CBDCs, potentially in wholesale form, to pay for those assets. Now, note too, again, guys, Tranglo, a Ripple partner. Tranglo obviously would probably like to bolster their bottom line. So, when they see the opportunity to, talk about something like this, something that is at that higher level from the IMF, from Christina Georgieva, they're going to jump all over it. It's all going to help the ecosystem. It's all going to help Ripple adoption, guys. XRP demand, because if more of these payments are conducted on the XRP ledger, as we've even seen, Jim Wallace talk about earlier, Ripple has been very successful with their CBDC effort. And so, this is just kind of paving the way for what is to come in the future. Anyway, great news there coming from Tranglo. And get this, from Mr. Mann, CFTC commissioner, says there are actually emergency measures in the United States that can be implemented if they need to regulate crypto quickly. Now, does that put shivers down your spine? Listen to this.
Way that we have looking at it and propose tools that are available. There are some powers that the CFTC, where I sit, has, but for something like this, which is, right now, particularly spot crypto, is not something that we can directly go in and intervene. There might be some limited circumstances where we have emergency powers, but that would need to be examined. We, as you know, are primarily very focused on the system of regulation around marketplaces, around exchanges and clearinghouses, and those market participants around commodity derivatives.
So cannot intervene, if I heard her correctly, with spot crypto trading, but can intervene with overall infrastructure that affects the United States. Interesting to note that, guys. They're trying to control this thing, but, if at the end of the day we cannot get, kind of a solid verdict on crypto regulation in the US, because there's a lot of back and forth, a lot of infighting, I think a lot of politics involved. Apparently the CFTC, this is Caroline D. Pham, by the way, apparently the CFTC can go ahead and just use emergency measures to regulate cryptocurrency if they see fit. And so as the rest of the world is developing, they're building, more demand is being driven to the XRP ledger. Globally, more CBDCs are being developed. Banks obviously suck at technology. So who's in it to win it, guys? Companies like Ripple and cryptocurrencies like XRP. So there are going to be a handful of coins, as Brad Garlinghouse said, that are really going to knock it out of the park. So guys, don't get distracted. I mean, right now we're in a spec bull run. So right now we got to focus on this. But the real world utility, guys, holding those coins for down the road, I think is going to be really important too. This is why I hold two types of cryptocurrencies, and I'm not selling all my XRP. This time around, I'm going to be waiting for those big prices for a portion, but I am going to be selling some of my XRP on top of the $10,000 plus portfolio, and I'm hoping to find some 50x, 100x bangers on there. Portfolio's doing fairly well as of now, but guys, we still have about 12 to 18 months to go. Patreon.com/workingmoneychannel if you're interested in that. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.